Hello traders, it's Samurai Trader here. Today I'll be presenting a lesson called the power of chart patterns. I'm going to be doing this over two separate videos, otherwise it may drag along. I think there's around 30 slides in this particular recording today that I'll be giving, and I'll be covering a great deal of information, so I might recommend that you have a pad and a pen handy. Now if you're watching this on YouTube, if you're a new user to YouTube, of course if you go down to the left hand corner here, you can expand this to fill the screen, just make it a little easier in looking at some of the things I'm going to be talking about. It's now 9:15 a.m. here in Australia where I'm recording this today. I've been up since around 2:30 or so a.m. trading the US market, so if I sound a little weary or pronounce something incorrectly, please forgive me. It's been a great morning, a long morning, particularly when you're looking at the screens for some hours. And as I always say, my video is always very real and direct. So I must also mention the risk. In any form of trading there is risk. Never trade with money that you can't afford to lose. Attending these sessions, having me coach you as your success coach, and by investing in my trading programs, etc., the whole idea is that you don't lose money. And one of the ways that we learn how to trade correctly, of course, is by gaining the right education and by gaining screen time. I can fast track your career by giving you the best or the world's best day trading setups. That's easy, but one thing I can't give you traders is screen time. That's something that you need to gain over a period of time. And of course, when it comes to learning to trade, I have to say this: there are no magic bullets. You are going to make mistakes, you are going to have losing trades. The whole idea is to become what I call a sniper. Most of you that know me, I classify myself, my trading style is one of a sniper. That is one shot, one kill. I'm very selective on the trading that I do. And actually after this session, I'm going to be recording just a video on some of the trades I've taken over the last couple of days for my members and potential members and clients. So if you watch that, you'll have an idea. And once again on YouTube, I've got a lot of videos there. Now moving on, one thing I forgot to mention, which I mentioned at the bottom of the previous slide, is that very soon I will be launching, and I've been talking about this, doing this for 3 or 4 months now, launching a live trading room. It will be limited to 50 members only, and the reason it will be limited is just with the amount of emails and questions that I get. The whole idea of the trade room is that we do some profitable trading, and I don't know about you, but I tend to get distracted, and I found when I trade I really need to be focused. For an example, last night before I retired for the evening, I took a trade, and you'll see this on this video. I'm about to record the next one. I was watching TV as I quickly took a pivot bounce and a T89. Now a T89 with a pivot bounce is a highly accurate trade. I mean, it's generally, if you do it right, it's a good 90% trade. And I have a standard 13 tick profit target set up when I'm trading the NQ 133. Now I really should have gone for this particular case at least 18 ticks, because my target was the 89 EMA, which was 18 ticks below. Sure, I got filled, it was great. I got 13 ticks out of it. It was very small stop, so it was a great risk-reward trade. However, I was distracted. So very important thing is to remember distractions, and that's one of the reasons why I'm not going to have too many people in the room, because I'm in this to make money from trading. Besides giving you the world's best education, I want to make money from trading as well. So getting back to this, chart patterns, footprints of smart money, anticipating price patterns. What we do know is that there are literally thousands of traders around the world. All they do is pattern trade. For an example, if we take Dan here, Dan is famous for making $42 million in 23 months. These are audited figures, so it's not just some pie in the sky figure that he's plucked out. It's very well known in the industry. He's made, of course, many millions of dollars as a trader. He's someone to really sit back and to study and look, hey, how does he do it? Now he does not use indicators, he uses volume and chart patterns alone. He mainly trades stocks. That's his market of choice. Now I love researching and studying traders because I practice something very actively called modeling. Model success. Look at what the best of the best are doing and model what they're doing. Traders, if you've watched some of my previous videos, you'll hear me talk about the 5% club. To truly succeed as a trader, that is, we know that over 90% of traders over time will lose their capital. We have to be in the 5% club, the top 5%. Interesting thing that Dan says here, I never give up. I never ever give up. The only way you can ultimately lose in trading is by giving up. Remember, persevere. So when it comes to chart patterns, because there are so many different types of chart patterns, what I'd like you to do is to learn to focus on one or two patterns and master them. Now, as you've heard me previously say, when it comes to trade setups, I always promote become a master at one setup, one trading strategy, become profitable at that before you move on. You cannot move on until you master that one. Now, a lot of the patterns that I show work beautifully in conjunction, and they are patterns within themselves with the strategies that I teach. So find a pattern that you like, a setup that you like, and become very good at that before you move on to the next one. Now this is a photo I took just before I started recording this morning. I just thought I would just show you this. On my trading desk, I have a very large desk, but I have nothing on it. It is totally devoid of anything else but my notebook for taking notes. You can see on the right hand side there with my highlighter. I have you just can't see that, my trade entry journal. I have this right here. Hopefully you can see my mouse moving around here. This is my trading rule book and the trade setup. So here I've got my trade setups that I'm looking for, and I've got rules and other notes typed up. Now when learning to trade, traders, and in a video recording I'm going to be doing in a few along from this recording I'm doing currently, I'm going to be covering extensively your trading plan and your trading journal and your trade rules, so what to have in front of you. Now I have a lot of information on those two sheets. When you first start, if you are a new trader watching this, or if you're relearning how to trade, that is, it hasn't been working out, less is best. You don't want to have much in front of you. But the critical thing I want to bring up here in front of you with you right now is these two folders here are two folders that I have just on chart patterns. Now quite often, as we know, we may be in a very quiet time. We may be in a consolidating market. I may be just waiting for my alarm to go off to let me know that I have a trade about to trigger, and I'll review my chart patterns during that time. And I have various things here highlighted. I take notes as I have successful trades. I'll take snapshots. If it's interesting, I'll then save that and sometimes print them out. So I have 6 or 7 of these folders. This is my main one, but with my trading journal, my notebook, where I have literally dozens of these folders of these notebooks, and every day I would do at least 1 or 2 pages of notes. Now when you're taking notes, what the notes really do, and when I go back and review them, they remind me of things that I may have forgotten about, or good ideas, things I've noticed, etc. I practice what I call constant and never-ending improvement, something that Tony Robbins talks extensively about, and I really believe that as master traders we need to be sharpening our skills on an ongoing basis. Now very quickly, before we talk about the chart patterns, when I talk about sharpening my skills, I don't mean moving from one strategy to another. Is there a better way? Is there a better way of trading this particular setup? So let's move on to chart patterns. Some of the classics we have: head and shoulders, which we're going to be looking at today, double tops and bottoms, price channels, and I'll go across live to just have a look at a couple of channels this morning, triangles and wedges, and within that and the flags and pennants comes the famous wolf wave. So I'm going to do these on a separate video. I'll probably record this in a day or two. So you can also consider something I love is the wolf wave, which is very famous, the wolf wave, but it fits within triangles and wedges. Now if we look at the language of charts, fact, prices tend to move in trends, as you'll see on some of the slides, which I've been teaching for close to 20 years now. You'll see some of the dates on the charts might be 1 or 2 years old, 4 or 5 years old. It doesn't matter the time frame. The patterns have been here for 50-60 years and they'll always be here, and it doesn't matter what time frame, what chart, what market. So what they'll give you is a footprint of what's happening with your sharp money, with the smart money. Let me get that right. Now this is something that I think fractals is one of the best kept secrets in trading. Now if you don't know what a fractal is, I talk a lot more about fractals in my training course in the fast track program, and they're a great way, and I have an indicator, by the way, that plots on my chart a black dot when I have a fractal set up, because when it comes to drawing patterns in using trend lines or looking for patterns on my chart, I use fractals. And Tom DeMark, if you look and read his books on trading, the new science of technical analysis, on how he draws trend lines and his patterns, it's very fractal based. And of course Bill Williams, he's written Trading Chaos and some other excellent books. He trades fractals perhaps in a different way that I use. I like to get in a little earlier before the move is over, but please study fractals. It will greatly assist you as time goes on. So head and shoulders. So there are 4 elements to trading head and shoulder patterns: a left shoulder, a head, a right shoulder, and a neckline. Now what I'm going to quickly do is not spend too much time explaining. You can stop the video here and read this in detail, but let's have a look at some charts here. So we can see here we've got the left shoulder, the head, the right shoulder, and this is where our trend lines come in. Now using our strategies, the fast track program, as you'll recognize, a lot of these points here you would have super scalper points appearing here, and fractals as well. So you would have had a fractal there, here, fractal here. You would have had a fractal point here. In drawing these trend lines, when you understand how a fractal is formed, it makes drawing these a lot more accurate, and it gives you a great deal more confidence. Now where you've got here inch short on the break of a neckline, the best way to gain confidence on drawing these is to go back and study charts. Doesn't matter what I show you here right now, you really need to go back and draw them up yourself and spend time studying these setups. It's a bit like reading a book on learning how to swim. Of course it's totally different when you read a book on how to swim from when you jump in a pool and start to paddle. Likewise in driving a car. Now another thing in learning new setups and some of these patterns, remember when you learned how to drive a car, if you learned by using a stick shift, a manual, down here in Australia, by the way, we call them manuals. In America of course is a stick shift. You know, you started to drive and you thought, what, I've got to watch the road, use the indicators, I've got 3 pedals, and I've got to learn how to change these gears. Once again, after a month or so, it becomes second nature. After a period of time of studying these sorts of patterns, it becomes, or you will develop, what I call reflex action, and that's the stage you really want to get to. Now getting back to what I mentioned earlier, there's so many patterns you can trade. You want to really find one that resonates well with you or fits within some of our main trading strategies that we teach. Once again, master one setup before you move on to the other. Now in my fast track program, by the way, I provide a complete set of these in a PDF for my students. So moving on here, we can see here taking before we were looking at necklines, or there on the right you can see going short, so shorting the market here. Then over here we've got, of course, going long. Now here we've got a lower low, so classically this upper setup we probably would have had divergence on our MACD or on our platinum. Here you probably would have had divergence here for the long side. So these sorts of patterns are your trend lines, and these patterns are great confirmation to confirm your other trades. Looking at fractals once again, you would have had a fractal pattern here, a black dot appearing, and another one here. So in drawing a trend, then applying a channel, fractals make it a lot easier. You would have had one here, here, up here, here, but we'll say fractals for, I'll move on, stop talking about them now. We'll look at those in more detail at a later stage. So double tops and bottoms, I love double tops and bottoms, particularly when it's with the trend. I use the 89 EMA and the 200 to give me a longer term view of where price action is heading. Of course, some of the popular ones, and I use a channel, an EMA channel as well, which is a much lower time frame. 34 EMA is very popular, so find a style that suits you. For newer students or those that are re-establishing themselves as traders, please use the 89, a slightly longer term EMA. But double tops and bottoms are great indications of where the market is heading. Now spend some time in reading these. Once again, stop and have a read, but I want to move right on because I didn't want to make this video too long. But we can see here a double top formation. Now this is where you'll quite often see double tops or double bottoms at support and resistance levels, that is at pivot levels, I should say. Sorry, I lost the word there. I was looking for at pivot levels. So your S1s, your S2s, your S3s, etc. Where you get a double top or a double bottom at these levels, it increases their accuracy incredibly. So where I get those at a double bottom, double top, you'll quite often see me, and I think I had one yesterday where I actually entered a double entry. That is, I had two trades on. That is, I went in there and it started to move, it come up, tested the resistance, then it continued down. I entered another 10 contracts. You'll see me quite often do that. Now when I do that, as I explain, that I'm always doing it within my risk parameters. As you know, with all of my positions on at any one time, I never risk any more than 2%, ideally 0.5% per trade, increasing up to 1% with 2 trades, up to a maximum of 4 trades on multiple markets if I'm trading quite often the IM or the black gold, the oil at the same time as the NQ. Now so double tops are fantastic. Now here with these breaks, we see these are also called your ABC patterns, 1 2 3 patterns. We would have been in quite often on this candle or on this entry here, because if you're waiting for some of these other entries, quite often we've given back as a day trader a lot of the profit that we would have taken. Here an aggressive entry, well, this here would have been a typical counter trend move, a T1 here and a T1 here. And where we get these moves where they move up like this, quite often these are what we call T89s. A T89 is an 80-85% accurate trade where we're moving away from the means. They're fantastic trades to take, and watch my videos, you'll see me take them every day for a very highly accurate trade. So double tops and bottoms are a great trade for us to take. We see a lot of this happen too. We go up there, you'll hit resistance, we'll come down, we'll bounce, and up we go again, and we all bounce again. Now On this point here, if you have what we call a T89 move here, quite often we'll see a move down, will go up, people will try to push it back up, buyers will push it back up again before it fails once again. If you look at your MACD, if you're using that perhaps for a divergence, you'll see that quite often on your second move here, on the second top, you're crossing the zero line on your MACD, or about to. You'll see that a lot, and a natural fact, you see a lot of traders, they use a zero line cross on their MACD as an entry to take a trade. They use it as I should say, a trading strategy. So we can see here, and I'm sorry, I apologize, I haven't been talking about the time frames, but the time frame really isn't relevant, because whether we're trading minute charts, range charts, if you go back and look at some of these daily charts, they appear in all time frames and all charts. Now I really want to get in, and yes, you can trade these breaks, and your longer term traders and even the day traders will trade these. We like to get in to some of these trades a lot earlier. So we can see here a double bottom, and once again, go back on a chart, find the time frame that suits you. Now in my particular case, and this is here's a situation, this is most of these, there's a few YM trades, but a lot of these based on Forex. This is an 8 range chart, a smaller range chart. Now on the Euro USD, I love the 5 range, but you see these patterns appearing every single day. You'll see these. Now over here, by the way, this formation was probably caused by a spike, by a news announcement. Some of these are not quite tradable. That is, when you catch these breakouts, they move that quickly, but this usually is coming back to have a short side, and this almost certainly is a T89. I can almost guarantee you had a T89, which basically was a great winner. You get to, and this is virtually, you can see the slingshot formation there. Great trade setups. So let's have a look here at we've got here an 89 tick, so this is a futures market. So we can see here we've gone back to futures, 89 tick. Now just on this point, on trading the YM, because you have lower volume during the main trading session, I love the YM, the 89 tick. On the NQ, the 89 tick is a great market, but sometimes it moves too quick. That's why I usually will trade the 133 tick. Now during the Globex session on the NQ, I usually will trade the 55 tick, referring to the 133. Now double tops and double bottoms, you can just see these trades here. So learn these charting patterns. Now going back to my trade books, what I do, and what I've done I should say, is I've printed out my favorite trade patterns just as a reminder, as a visual reminder. Remember, as traders, there's so many different things that we need to remind ourselves about on an ongoing basis. So just by looking at the charts on a regular basis, it just is a reminder. For an example, this trade that I took last night, that I'm doing a recording on very soon after I finish this one, I think it was about 8:38, 8:50, I just can't remember the exact time now. I took this trade. It was a as I mentioned earlier, a T89 pivot bounce. I'd like to, and I didn't do it last night because it was a visual thing. I quickly looked at my screen, saw this setup, and I jumped in. I like to quickly review my trading rules as I'm trading and before I trade, particularly after a weekend, as a reminder, by printing out these chart patterns, having them in a folder as you're trading during the day, or of an evening, you'll have quiet times. You just go back and just as a visual reminder, remembering the rules. Now, price channels. I love trading channels, particularly when using and I should have mentioned this earlier too, in using anchor charts. Now I am going to be doing a trading lesson. I think I've got it booked down in 4 sessions from now. This is why you should subscribe to my YouTube channel or invest in my program, because anchor charts are an essential part of every professional trader's arsenal. And when using price channels, I love price channels with anchor charts because you'll see bounces off the channel, and they just give you these brilliant entry signals. So I love price channels. So if we look here at price channels, now this is on the 8 range. Now once again, if you're trading an anchor chart, you're going to have a much higher time frame than a range chart. Now one thing, just why I think of it here, there's every professional trader has an opinion, and even those traders that aren't professionals or perhaps but keep losing have opinions on how you should trade. Now some people say you should only trade price channels or anchor charts, I should say, with time. Well, I don't agree with that. I love range and tick charts even with anchor. To me it's irrelevant. I just wanted to mention that because these price channels work on all time frames. Let's quickly flick across. I'm just going to pull TradeStation up, and let's have a look at some channels from this morning. So what I've got here is TradeStation. This is this morning's action, or today for those well, you don't know what date it is probably. So it's the 2nd of June down under. It's the 1st of June in the US, and this is the NQ133 tick. So what I've got here is marked up a number of trades here, but here we can see here I've got some I've gone short here. Now let me just clarify that I was still in bed at this stage, but I would have shorted up here. Now by the way, here's a classic case, a small T10 that I would have been stopped on, because my stop on a 133 is 2 ticks above. This would have been a losing trade for me. Winner, 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 winner. Now that one there, for those at Nova setups, which we're not going to cover today, you wouldn't have been in that because of our zero lag. But we then fired off 3 or 4 winners in a row and basically would have just about been finished for the day. So let's have a look here, getting back to drawing channels. Let's have a look here. Now what I'm going to do here is extend this right. So because here of course you don't know what's going to happen down here, so I like to look here, and we can see these black dots that I have. Let me actually just remove that again. So see these black dots here, these are the fractal points. Now all they are is showing me that I've had 2 candles up to the left and 2 candles up to the right. Now I like to have at least 2 or more, which give me a great point for drawing trend lines. So let's just say here I'm here on the action at this stage. This is not formed, so ignore all of this over here. What I'm going to do here is now extend my line to the right, and bingo. Now what I now want to do here is do a parallel line. Now look at this here. Isn't this amazing? So I've drawn it here. What's the market go and do? Bang, it bounces off here. Now here it doesn't quite go up and reach there. Now as you get more formations, you then pull this in. Once again, this is not exact. Close enough is what I call good enough when it comes to channel trading. So we can see here we've now had this one form. I might pull this in a little bit more just to tighten up this channel. This one here I've extended to the right as well, and what happens here, I'll just pull it in a bit. My channel, you can see this channel, you can see how price is generally contained within the channel. Now we then come down here, we've broken out of a channel, but what have I then got? I've got a beautiful, it's a T89. I won't go into why it's a T89 on this channel, on this video recording, and I've got a great pivot bounce. Bang, we come up near the channel, bounces down, then we have a breakout, and it continues. Now what we've got over here is a long-term rising, my long-term stoke is rising. I've got a T1 formation and a confirmation here, and this is basically a double bottom, and away it goes until I get my T89, which is a beautiful winner. Now but let's go back to trading channels. So let's have a look at this here. So of course when I get to this stage, we don't know what's happening across here. Remember, this is all blank over here. We've got no idea. So what I'm going to do is do a trend line, and I want to extend it right again. Look at this here. I had 2 or 3 points, once again a little more width here. So I had this one and this one. Ignore the white paint bars, but I got my little fractal points. I extended it right. Look at this, bang, it bounced, come down and bounced, and it bounced again. Now I don't know about you traders, but I just find it fascinating. These patterns appear in the market every single day. Now let's now go and do a parallel line. Let's go up here and look at this. All I've done, this is just an identical line to this one, gone up here then to these points here. Okay, remember I only had these. I extended that. I then drew a fist point, moved it up to here, bang, 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 before finally it broke. Now traders, this is why you need to learn how to trade using parallel lines, channels, double tops, double bottoms, etc. So you'll see these patterns every single day, and you can see what happened then down here. We then had a slight breakthrough before we had a bounce up. It went, we had another bounce, went up there. Look at this here. Now I have a fair amount on my chart here, so sorry if you're getting lost here. When you're learning to trade these setups, you want to minimize the information, of course, is on the chart. I get to read this, I know this well, but look at this extension of this line here. See, we went up and we bounced off it again. We had a small bounce before we had a T2, and we continued for a T89, which is a lovely trade up here. So hopefully it just gives you an idea of the power of learning these trading patterns. They're extremely powerful. Now getting back to learning these, if you are a new trader, perhaps just found me on YouTube and you're wanting to learn how to day trade, you learn these over a period of time. When I say period of time, 30 to 90 days. Treat it as a 90-day apprenticeship or internship. Within 30 days you have all these massive aha experiences. That is, you start to mark these up on your charts as you see them, and even going back and marking them up. And if you put in just 2 to 3 hours a day, now I know what some of you are thinking, I can't find 2 to 3 hours a day. To become a master traders, you have to find at least 2 hours a day. Get home, don't watch the video, turn your TV off, unplug it, go and sit in front of your charts. Trading is going to make you wealthy. There is nothing like it in the world. Come along and trade with me and you'll get to see the excitement of it. I love it. It's my passion, it's my lifeblood, and it can be yours too. It'll change your life, but you do need to invest at least 2 hours a day learning this stuff. It's not difficult. Trading is not rocket science. So what we can then see is price channels where we're range bound, and we can see this happen quite often. Of a support trend line we see on the bottom here might be a pivot level. We just bounce around, and we see this virtually every night trading the European market leading into the opening of the New York market. Quite often we'll go into a period of resistance or support where we just have what we call a trading range, and so then we're waiting for a breakout. Now these breakouts that we want, and so when we look at these boxes, and of course you've got the Davis box and lots of other people teach you all sorts of things when it comes to trading these boxes. I love to see a break out of them and come back and retest. Why? You'll have professional traders will break out, that will run the market, take out all the stops, then it'll run back down again. So you've got to watch out for your false breakout. So what we like to do is see a breakout, come down, test, and then continue. And these are quite often what we call T10s or T2 setups. Very easy to recognize over a period of time. Once again, practice drawing these trend lines, channels, and putting the parallel lines so you can get to draw them, and you'll just be amazed. Now in my next video I'm going to continue with chart patterns and cover triangles, wedges, and the famous wolf wave. I love the wolf wave. Now the wolf wave is nothing more than a triangle or a wedge, depends which way you look at it, but it's also great for putting in what we call measured moves. That is, it gives you a higher return to target. You can go for 2 to 1, so for every dollar you're risking, you can target $2, and they're a great pattern. Quite often it's a change in trend pattern, but an incredible pattern you really want to learn. So hopefully over this 35-minute video, traders, you've taken some notes or started to get some ideas. Please go back and re-watch it, stop it, take notes. Traders, it's absolutely critical that we gain an education. As we say, formal education will make you a living. Self-education will make you a fortune. The trading industry is untapped for most people because they don't get serious about learning how to trade. Is that trading is not difficult, as you heard me talk about before. It's not rocket science. Anyone can learn to trade as long as you're willing to put some work into it. Take notes, study, and become a specialist. Thank you, traders. I will see you in my next video.